Today morning I have received almost 300 messages on my WhatsApp. So my WhatsApp is kind of almost crashed because of this. Okay. So first, I would like to take you to this particular article, Business Today, January 29 dated. So if you read through this article, you generally get an idea. See, I'm not telling any big story over here. You generally get an idea how the markets have responded. Okay. Plus now I need not say, since it is very clearly visible over here. So what has happened on the charts? Quickly, let's look at Sensex. I'll show you the charts also, but I'll start off with looking at the data. So Sensex has dropped down 2011, 2012 it 2011 it picked up, 2012 it dropped down, 2013 it dropped down, 14 it dropped down, 15 it picked up, 16 it dropped down, it picked up in 17, it dropped down in 18, it picked up in 2019, and in 2020 it picked up. So 1, 2, 3, 4, 5, 6. So 6 out of last 7 years, markets have dropped in value. Okay, talking about Sensex. Now let's quickly have a look. Let me just enlarge this for you. So this is Business Today. Okay, you could also take it out. Now if I check out Nifty, okay, 1, 2, 3, 4, 5, 6. Okay, Nifty to 6 out of 10 years, Nifty also has dropped down in value. So talking about this, we see, so we are kind of actually looking at a quantitative analysis, that is like how the markets have based upon numbers, purely based upon probability. Nothing we're looking into the technicals or something over here. Pure probability we're checking. So 6 out of 10 the markets have dropped down. Okay. So I had actually taken a snippet from Money Control. Okay. So this is nothing else but a snippet that I actually kind of took from Money Control. Okay, so some important points that I had actually kind of taken out. So just quickly have a look at it. In the sense, budget 2010, whoever was the finance minister just wrote this down. Okay, so I'm not getting into all these things. Why? Because this is pure, you get it on Google. Okay, so just Google how the markets have responded last 10 years. Just I'll show you the Money Control article. Because if I just read it out, because nothing much to contribute from my side, and I probably would be having to read exactly the same thing the Money Control people have mentioned, right? So it's best that I don't read it out. I'll just show you the article. You too could also have a look at it. Just a second. We're just starting off. I told you I'll start at 12:45, right? So, okay, what is MDTV? Okay, so if you just have a look over here, here also you can actually read about all these things. Okay, so I guess this was NDTV. Okay, so you realize like who was actually presenting the budget, and so Money Control article is there, NDTV article just came up. So who was presenting the budget and how has the market responded towards it? So last time who kind of did the budget, who presented the budget last time? So it was one of the lengthiest speech also. So that is also there. So I kind of remember that Nirmala ma'am, she was actually speaking for so long, like so very lengthy budget. Do you remember that? Yeah. So it was actually a pretty long budget last time. Okay. Now the next thing I'm kind of going to do is I'm kind of actually going to share with you guys how some files which is showing. Okay. So this you guys have already seen. How much Sensex has moved. So we saw that 6 out of 10 times the markets have dropped down on the budget day. Now, this is the thing with Sensex. So you get it on Google. I'm not sharing it or something. You can take it from Google. Okay, Business Today. So this is for Nifty. Okay, how the markets have actually behaved. Okay, so here also 6 out of 10, the market have actually dropped down. So next, what I'm kind of going to show or share with you guys is nothing else but how Nifty 50 charts look like on budget day. So this you could maybe, if you want, you can take a snippet or a snapshot, something like that. Why? Because it's kind of going to take you some time to scroll back to all these charts and keep a record. Okay. So if you want, you can actually take this down. Okay. If you want. Okay. No compulsion. If you want, if you will kind of actually find it useful or something, uh, you can kind of take it down. So first of all, this is the thing with 2011. So any idea 2011, which was the date? Uh, which was the date? Come on, guys. I thought at least one of you would have taken out business today. Okay, anyways, I'll take it out. Yeah. So 2011, it was nothing else but February 28. Okay. So February 28 is this one. This is the candle. Okay. So it was bullish. So this candle that you see is the one that is actually showing as a chart of Nifty 50 on that particular day. Okay. So let me just go to the next date. So that is next date is March 16. Okay. So March 16. So this is the candle that is basically showing us markets dropped down. It's a bearish candle. Okay. Uh, Once I kind of show you all the charts, then only it'll make sense. Now, some of you would be thinking, why is this guy kind of showing me the charts? Why can't I take it out myself? So this is the chart of 16 2012. The markets dropped, Nifty 50 dropped by almost 1.16%. Now, this is the chart of 28 February 2013. Okay, 28 February, market dropped by almost 1.8%. 28 February 2013. Then comes 2016. So in the year 2016, the market actually picked a drop down. Once again, 2016 market dropped down by almost 0.6%. Now you probably have this question. 2015 is not shown over here. So friends, let me tell you, 2015 a chart. I don't know. It is not there with any of the data services that I have. Not there on TradingView. Not there on my AMI broker. Nowhere. I don't know. I don't know why it's not there. I'm not able to take it out. Okay. So it'll take me time to retrieve it. So I thought, okay, fine. Let's skip 2015. 2015 market picked up, by the way. So this is the chart of 2016. Once again, on 2016, market dropped by 0.6 percentage. Then comes 2017. Okay, 2017. The budget was presented on 2000 February 1, 2017. So February 1, 2017 was the date when it actually was presented. So market picked up by 1.8%. That is actually a really bullish candle that you see over here. Let's go to the next date, 2008. Let's get into 2018 now. Where is it? Yeah. So 2018, if you see, so as you can see over here, we kind of actually had a drop, but not a significant drop as such. So it is February 1, 2018. That was the budget day. Market kind of dropped by almost 0.13% something. So this is like not so significant, 2018, but still it is red. Let's get into 2019. So 2019, what do I see? So 2019, what do I see? Okay, 2019, it is February 1. Okay, February 1 was the budget day. From 2017 onwards, it is every day first only. To February 1, 2017, February 1, 2018. Okay, so in 2019, when I'm seeing, the market actually picked up in value. It picked up by 0.6%. So this green candle that you see over here is a candle of Nifty on the budget day. So how do you see, or how do you kind of actually talk about the volatility? Just see the range or how much Nifty has actually varied in value. Just have a look at the volatility. Yeah, I'm coming into that also, Alvin. So I have that as an inference also. So how do you kind of see the volatility over here? Market moved violently, right? Okay. So next, let's get into the last year, 2020. So that was a bloodbath day. So just have a look. Just have a look over here. Any idea how much market dropped on that day? So this is 2020, 1st February 2020. So once again, Nirmala Sitharaman ma'am was the finance minister who was presenting that biggest, lengthiest budget. So how did the market behave? Just have a look. Market dropped down by 3.2 something, 3.2% something. Okay, so that was like a big drop. Fine. So this is a thing with Nifty. Okay. Now you see that, okay, something I just wanted to be specific with. For the last 3 years, we kind of had really good volatility in the market on the budget days. Okay, and that is one particular reason why many people actually stay away from trading. Also, many people actually stay away from trading. So many people who are kind of completely new, it is suggested that they stay away. Why? Because the volatility could be too extreme. And on these kind of days, basically, we can't actually trade based on price action. We can't trade based on, in case somebody is capable of trading with indicators, he or she won't be kind of very fine with trading. Why? Because it's a news driven market. We, so we can't actually say which direction market is going to head to. Any direction market can move. The moves could be pretty much violent. Okay. The moves could be actually pretty much so violent. Okay. Now, let's kind of see how Bank Nifty behaved. So this is going to be interesting. So this, no, I didn't implement this. So this was what one of our friends was mentioning. So I just tried this out. I'll just tell you what I implemented. So this is kind of what I have implemented. Okay, this is the setup that I have implemented. I'll tell you the rationale. I'll tell you the reasons also. Just stay till the end. So you can implement, if you are looking forward to implement, do with your own understanding and analysis. But you can implement before the market closes. No problem. So let's quickly have a look at Bank Nifty now. Okay, so this is going to be interesting. Stay very much attentive. So even if you have just joined now, it is fine. Let's have a quick look how Bank Nifty on the other hand side has behaved. So this is the graph of 2011. So are you guys able to hear me? Am I perfectly audible? Am I perfectly audible? Right. So this is the graph of 2011, chart of 2011. So 2011, when Nifty kind of actually February 20th, when Nifty actually kind of uh, what do you say? When Nifty kind of actually picked up, just referring, yeah. So Bank Nifty kind of dropped down, it seems. So this is the like chart that I see, 10,600, 10%, yeah, the 400 point range. Bank Nifty had a move of almost 400 points. The range in which Bank Nifty move was almost 400 points. That is high minus low of that particular day, 400 point. Now the next day, 2012. So March 16, 2012. So March 16, 2012. So we kind of actually had a 500 point range. Okay, that is Bank Nifty. This is the candle. This candle is what you see. March 16. This particular candle. So Bank Nifty had a move of almost 500 points. Now the next, okay, 2011 again. Okay, 2011 by mistake I took twice. Okay, guys, I made a mistake. I'm really sorry. That is why we have the candle once again over here. So 28th February, the candle that I showed earlier was wrong. Okay, I guess this is the candle. 28th February, this is the candle, it seems. Okay, so this looks red. So this one, yeah, this one I suppose. Anyways, so the range of that particular day was 400 points. Okay, I guess that's the reason we have two charts over here. Maybe some mistake I made, but more or less the same. Now 2013, let's look at. So the budget till, let me just cross check. Yeah, 28th February. So we had a 600 point move, 28th February. This is the candle. This big red candle is what you see. Is the movement of Bank Nifty on that particular day. So 2014, let's look. So 2014, it was 10th June 2014. So 10th June for 2014 is also a red day. So 250 point range we had. So 250 point range means, what do you mean? So Bank Nifty kind of like between the high and low of that particular day, the distance was 250 points, almost approx values, not exact values, but approx 250 points. I didn't kind of get into the deeper chart and see, but I just with the crosshair just check 250 point range. Now let's get into the next chart, 2016. So 2016, if you see, 29 February 2016. So 29 February 2016, Nifty was down by 0.6 percentage, but Bank Nifty was actually bullish. It kind of had a range of 800 points. So this is a particular day between the high and low of that particular day. Bank Nifty moved widely 800 points. So 800 points is kind of a big number. Okay. Uh, During 2016, it was very big. Why? Because that time Bank Nifty was trading at 14,500. Okay, now if you ask me 800 point, okay, this guy is speaking 800 was very big in 2016. So nowadays Bank Nifty moves 600 points on a day. So what do you call that then? So let me tell you. So 800 point at that time Bank Nifty was at a lower value. Just have a look at the absolute value of Bank Nifty too. Okay, so 800 point is kind of pretty big. So now let's get into the next year, 2017. So 2017, if I see February 1st, once again. So February 1st, that was a bullish day. Once again, Bank Nifty actually had the 600 point range between the high and low. Next, let's have a look at 2018. Okay, I don't mind sharing all these folders with you. We'll be sharing it with. Just have a look. Now you could also take it out from Trading View. Taking it from Upstock, Zerodha, all these things, it could be a bit time consuming. Why? Because you had to scroll a lot. You had to go back many years, and maybe you don't get the data also. Uh, so it's best that you check either on Ami Broker, some tool like that you can use if you have the data. So when it kind of comes to 2018, on the other hand side, once again we had a 600 point range, that is between the high and low, almost Bank Nifty fluctuated 600 points. Now comes 2019. So 2019, how much did Bank Nifty move? February 1, once again, 700 point. Okay. So all the February ones, the movements have been kind of pretty much big. That is what we see. Okay. 2019, 700 point range was there in Bank Nifty once again, 2019. Now, let me just get into the last one, 2020. So how much, what sort of range did Bank Nifty have on 2020? So the range was almost 1000 points, fluctuated between 31,000 and came down to almost uh, 29,800. Okay, so more than 1000, right? So it's not 1000. Sorry. So 31,000 to 30,000 itself is 1000. So it kind of actually came down by more than 1000 points, right? So that is what we see. So almost like 1,200, 1,300 point ranges there in Bank Nifty on the last uh, budget day. So this is what we kind of actually quickly see by looking at the graphs of Bank Nifty. Now I could show you one more thing. Do you guys want to see exactly the charts of that particular budget day of Bank Nifty? If it is interesting for you, I'll show. But if you guys are feeling bored right now, then there is no use in showing. Do you want me to get into the exact chart? Sure. So yeah, just a second. Yeah, sure. Sriisha, just a second. So Sriisha basically mentioned analyzing the reason behind these moves is important because of taxes for Nifty and infusion of funds into banks play a key role for Bank Nifty. Okay. Now what I could say is news or kind of reasons for these kind of moves happening is something that is out of our hands. So we really don't know what is there in the budget, right? So none of us know what is there in the budget until and unless it is mentioned outside. So, kind of depending on the reasons and trying to cross check with the news that is coming in, I really don't think that is going to make sense on a budget day. And you guys know, many times when the news is good, markets falls down, and many times when the news is bad, market kind of picks up. Okay, so depending on the news, I don't think that is going to do something great. This is my personal understanding. Okay, now let me just tell you, yeah, Sumant, we'll do that also. So let me just show you the exact graphs of what has happened on the budget days. Now, two options are there. Either I had to take my AMI broker out, or I could actually share with you guys what Kirubagaran sir has posted. Okay, so he's the founder of Square Off. So I'll just show that because that'll be easier because he has already taken it out. Else I'll be having to take it out once again. So just show you that. So he has basically shown it on his Instagram. So okay, just a second. Stop sharing. So different screen, just a second. Yeah. So I guess by now you should be capable of seeing the screen. Okay. Yeah. So this is the chart of Bank Nifty on 2012. Okay. So you can see, okay, during the initial hours, that is almost till 12. Okay, so now our friend Alvin has mentioned that most of the time the violent moves happen post 12. Okay, or post 1. If you ask me, I'll say 1. So over here you can see, yeah, the market was kind of actually slow. Then towards the end, it kind of dropped down. Then it picked up. Again, it dropped down. So this is what happened with Bank Nifty on 2012. That is, it was kind of pretty much volatile. Okay, so nowadays you would be like, okay, every single day it is volatile. So 2011 budget day was too volatile. 2012, if I see, it was really bearish. Towards the end, it became absolutely bearish. That is like post 12, the market started, post 1 to be specific, market started being really bearish. 2012. 2013, if I say, like from the beginning of the day, the market was actually trending downside itself. It was a negative trending day for Bank Nifty. 2013. 2014, if we see, once again after 1 p.m., the market started responding bearish. That is falling down towards the end. Towards the beginning, it was not moving. So after 12, it picked up. Then it kind of corrected the very same day. 2015, if I see, post 1 p.m., we kind of had a violent move, but on the upside towards the positive direction. 2016, if you kind of ask me, like it kind of opened, it kind of closed at a higher rate, but if you specifically look, like opening and closing is almost towards the same place. 2017, once again, the move is violent move is happening after 1 p.m. 2018, let's quickly have a look at 2018. So if you quickly have a look at 2018, once again, a directional move is happening post 1 p.m. itself. That is, market was continuously sliding down after 2000, after 1 p.m. 2019 too, if I see, market has been continuously giving a directional move after 1 p.m. Here also on the negative side. 2020, let's see, 2020, if I see, in this case, post 12 p.m. itself, market has been sliding down. Okay. So now you guys would be like, okay, 2000, these things are with 2020, 2019, all this stuff. So what do you kind of actually say about 2020? Now, let me just tell you, there is basically nothing much to comment over here. So this is how the markets have responded earlier. Now, if you are kind of taking a position, maybe you could use this data, because trading based on technicals is not going to be so sound. I personally have felt from my experience. So having a look at how the markets have responded. Now, all of you guys know that after 12 p.m. or after 1 p.m., market has actually kind of started giving a move. That is, on the last 10 years, it is majorly after 1 p.m. or 12 p.m. that the market has started giving a directional trending move most of the times. And majority of the times, what was the direction of the market on budget days? What do you think? What do you think? Like, what was the direction of the markets on majority of the days? So we see like there has been a bearish tendency, but I'm no one to say market is going to drop this budget. So none of us can say that. But post 1 p.m., mostly we have seen a bearish tendency in the markets during the budget days when we see the previous charts. So maybe this year, maybe it is really bullish. So all of us should be happy if our investments are there. Okay. But majority of the times what we say is post 1 p.m. the market, even though if it was bullish initially, it has corrected towards the end. Okay, now if it was bearish initially, it has continued its downside manner. Uh, that is what we see from the charts. Now I have shown you the charts of Bank Nifty also to be precise. Then I'll kind of take out the option strategy builder and I'll see how the payoffs would look like and why I implemented a reverse iron condor. I'll tell you the logics, etc., etc. So let me just take out the option strategy builder first. Okay. So two things can be done. Okay. So first common question that I have received is, can I go for an iron condor? Can I go for a long straddle? So what do you mean by a long straddle? So when I say a long straddle, what I'm basically doing is I'm buying at the money call, at the money put, both I'm buying. Okay, I'll just show you an example over here. So let's say that I didn't just delete these two. I'll do the job. Okay. So I received a lot of questions kind of regarding long straddle. Okay. Okay, I'll just reset this 30,000. So Bank Nifty is at 30,500 right now, right? 30,600. Let's take it 30,600. And the weekly expiry would be preferred 30,600. Let's go with 30,600 itself. So you're buying both a 30,600 P as well as a 30,600 CE if you're implementing a long straddle. So I'm not asking anyone to implement this. Kindly keep this in your mind. So don't listen halfway, go and implement. So this is what the payoff of a long straddle would look like. Okay. So what is actually going to happen is if Bank Nifty gives a violent move on either of the sides, you will make profit. That is, let's say Bank Nifty gives a really good move on the upside, you make profit. A violent move on the downside, still you make profit. So here your maximum risk that you're going to take is going to be 33,000. 33,000 is the premium required also. So you once again know as an option buyer, the maximum loss that you're going to take is going to be the premium that you're going to pay. Now, some friends actually think, okay, if Bank Nifty actually just give me a small move upside or a small move downside, I'll make money. Now let me tell you what happens is here 30,600 C, you are kind of paying 632 rupee. For 30,600 P, you are paying 699 rupee. If I quickly check, the price of Bank Nifty is 30,550. Well, let's for simplicity of calculation, let's kind of take it as 30,500. For simplicity, let's kind of actually take it as 30,500. Just a second, guys. Okay. So for simplicity, let's kind of take it. Okay, 30,550 itself will take. So any idea what is going to be 30,550? What is going to be the intrinsic value of this put option? 30,600 put option if we take. What is going to be the intrinsic value? What is the intrinsic value of this 30,600 put option? Can someone say? 30,600 put option I'm asking. Currently price is 30,550. So as our friend Aditya is mentioning, so now it is 30,533. Market has slipped down a bit more. So intrinsic value is nothing else. This is 30,600 put option is already in the money. Okay, this 30,600 is kind of already in the money. So currently, if you ask me, it is nothing else but 30,600 minus 30,533. That is nothing else but 67 rupees is the intrinsic value of this put. So what about the rest? So 67 rupees is the intrinsic value. The rest almost uh, 620 630 rupees that you're going to pay is nothing else but the extrinsic value. So this extrinsic value comprises of two things, as I always say. So one is the time factor and the other one is the volatility factor. It's not just the time value, my friend. It is both the time factor as well as the volatility factor that is going to be there. Going to be both the time factor as well as the volatility factor that is going to be there. Okay. So if I'm just going to get into IV now, having a look at IV, we had to conclude this within 15 minutes. So if the market is capable of picking up at the time of expiry, if the market settles above this point or this point, that is when you will make money at the time of expiry. Okay, that is uh, if the market settles within this range at the time of expiry, that is this coming Thursday, you lose money. But let's say that Monday the market picks up violently, gives such a big violent move, then definitely you will make money. If the market gives such a good violent move on Monday, you'll make money. Now, one constraint is there. Can you tell me what is the constraint that you would be facing by buying options, like naked options? Because here you're buying both a call and both a put. So, what could be the constraint that you would be facing? Can someone comment? Yeah, the break even is okay. High break even at the time of expiry. But let me tell you, if the market is giving a violent move on Monday, definitely you'll make money. Okay, Nikhil has the right answer. Okay, exactly, Pravesh. So definitely, if the market is going to give a violent move on Monday, and if the provided all the values stay the same, that is the IV stays the same, everything stays the same, then definitely market is moving violently. Provided all the other factors also stay the same, then you will actually make money. Okay, but let me show you something else. I'll just take out the option chain. Okay, If you quickly have a look at the money options, you would definitely realize that right now the IV values are pretty much high. Okay. So when earlier the IV values were somewhere in the range of 23, 22. So right now, if you see, the IV values are pretty much spiked up. It is at the is kind of at 32 right now. Okay, IV values are too spiked up. So why? So what will? Why is the IV value pretty much spiked up at this point of time? So this is because of nothing else but the budget. Market is kind of expecting some sort of violent moves to happen on the other side. Due to the very same reason, all the people who are selling the options, they are looking forward to collect much higher premiums. Okay, that is the reason the IV values are kind of pretty much spiked up at this point of time. Now, what is kind of going to happen if the IV values are going to crush? Okay, let's say the market is picking up, but the IV values crush. So if IV values crush, still the call and put options that we buy will depreciate in premium. And if we don't have like an extreme move, we probably could lose money. I'm not telling you we lose money. If the IV value drops down a lot, that is, if the IV crushes like anything, and if the market doesn't give much of a move that we have as we have expected, then we lose money. But we are not anyone to comment what is going to happen or how much the market is going to move. We can make use of purely probability. So here I'll be risking 33,000 if I'm going for a naked long straddle. So this is the most common question that people ask. Okay. So now let me just show you, not this. Okay. I'll just show you something else. Yeah. So this is not what I have implemented. Just a second. I'll just delete this. I don't know why I'm not seeing the payoff. Okay. So this is the naked long straddle, where you buy a call, you buy a put, you just keep it running. Okay. Just going to be a payoff at this moment. Now, kind of let's see that, let's kind of talk about a scenario. You are really not sure. You're kind of actually really not sure whether the market is going to move really violent. So what I personally have done is, I'll tell you why I did that also. So this is what I have personally implemented. So the values that you see over here is exactly the values that I have implemented per set. Okay, I'll tell you what you all of you know what iron condor is. So when we do iron condor, so when we basically do an iron condor, what are we doing? So if the price of the spot is over here, we'll sell a strike a bit far away. In the sense, like defending the range definitely is there. Checking out the OI, all this stuff. Checking out the ITM probability. We sell a put which is beneath. We sell a call that is above. We buy a more out of the money call as protection. We buy a more out of the money put as protection. So that if the market settles within this range, you make money. Here, on the other hand side, what I personally feel is I'm kind of actually expecting some sort of a move to happen over the week. Okay, that is like some sort of movement to kind of happen in Bank Nifty over the week. So preferably on Monday. Okay, preferably on this coming Monday itself. I personally think, okay, if some sort of good move is happening, what can be done? That is the thing. So what I have done is I have actually bought the put option. That is the 30,000 put option I have bought. Along with that, I have also bought the 31,000 call option. 31,000 call option I have bought. 30,000 put option I have bought. So what is this? If I just buy them naked, it is nothing else but a long strangle. It is a long strangle that I'm buying. If I buy an out of the money call and if I buy a out of the money put, it is going to be a long strangle that I'm going to do. Now, can someone tell me what could be the limitations that I have if I just go for a long strangle? So first of all, my maximum loss amount will be higher. Okay, that is whatever that you see as a estimated margin. Maximum loss would be 30,000. If I just go for a naked long strangle, my maximum loss would be higher. Now, the next thing is, let's say that the IV is crushing down like anything. So you guys know about IV crush. So I'm very glad that you guys have mentioned. So post the event, post the budget, yeah, definitely we can expect IV to crush down. Maybe at the time of announcement also, maybe we can actually see some gradual drop in IV. So if there is some sort of a crush happening, I kind of actually need to have some protection over there also. So what I did is I have also kind of sold. Uh, so earlier case when we were selling nearby strikes and buying more out of the money strikes for protection. Here I have bought the nearby strikes, expecting market to kind of give a move out of this range. Just a second, guys. Okay. So what is basically going to be done is I sold the more out of the money. That is, I have sold the 33,000 call and I have also sold the 28,000 put. Now, two advantages I got out of it. So out of selling this, basically, let's say that when I'm kind of doing this, okay. Okay, one more thing I have actually done in the weekly expiry. So let's say by this kind of a week, I personally feel okay. Let's say market has already gone out of the range. Okay, so this is going to be my payoff. So if some sort of movement is going to be there, I expect the price to pick up, or if there is any negative side movement also, I expect the price to pick up. Okay, now let's say that I have actually realized some satisfactory profits on Monday. So at the moment the profit per set is 1.38 percentage or 422 rupees at this moment. So let's say at the time on Monday itself I'm realizing some satisfactory profit, or let's say by some chance Bank Nifty picks up by some 500 points or 600 points. Okay, or let's say it falls down also a lot. Then definitely I'll tell you like what sort of profits I would have. So right now, if I see it is kind of going to be Bank Nifty falling down by 500 points, my profit is going to be some 3K per set. But because of the IV crash, all these things, I kind of expect it to be something around maybe 2K. Okay, let's say I don't know. Like we had to see to what extent the IVs are dropping and stuff. Okay. Anyways, if I have some decent returns on Monday itself, I will be exiting out my position. I won't be waiting till Monday. But let's say that by some chance there is kind of going to be some extremely volatile move happening on either of the direction and market plunges. Then, if I want to realize my maximum profit, market has to pick up. So right now it is 30,500. Market has to pick up by almost 1,200 points on the upside, while on the downside, market once again has to drop down by almost 1,200 points in this complete week for me to kind of actually realize up to the fullest. Okay, it has to drop down further also, considering this particular region. But if you see the risk reward, it is 1:2. Okay, the probability is like just around 50%. But my personal assumption is that okay, market could actually move violently on Monday, and if that is the case, then I will realize some sufficient profits and I can exit out of my position. So that is my personal agenda at this moment. If markets is giving some good moves on Monday, on either of the direction, I could kind of actually book some profits and exit. Now, if it's kind of very like good violent moves happening, then strangles would also generate you really great profits. I'm going with this. This is a reverse iron Condor. So this is the exact values that I have implemented. Okay. Now, one more thing. So is this the only thing that I'm watching out for budget day? So let me tell you, let's say that on budget day, let's kind of say that market is going to be opening at the same. Okay, one more reason. Now, many people ask, why have I implemented it today itself? So we have 2 days time in between. Now let's say Bank Nifty is kind of doing a gap up or gap down opening. So I personally feel that I could actually be favored with that particular gap up or gap down opening happening. I think, yeah, I could kind of be favored by that gap up or gap down opening happening. Plus, one more thing is that, so I'm planning to take like maybe a short strangle. That is, this is with Bank Nifty. So let's say the Nifty. So Nifty has a high likelihood that wherever it has opened, it manages to close somewhere there, almost the same place itself. So short strangle looks like an ideal setup with almost a 30 to 40 points outflow being capped. So I'm just thinking about that. Not decided whether or whether not to do. Wait for Monday to decide. that also post 11 o'clock or 10 o'clock only. Then the other, like someone who wants to play it really safest. Okay, someone who wants to play it really safe, who doesn't have much of a capital. So just let's quickly have a look over here. Market drops down towards the end. Towards the end, once again, markets drop down. Towards the end, market, so it's continuously dropping down only. Towards the end, market drops down. Towards the end, market picked up. Towards the end, market kind of stayed the same. Towards the end, market picked up. Towards the end, market drops down. Towards the end, markets drop down. Towards the end, markets drop down. Now, let's say that if we kind of see scenarios like the market undergoes a good bullish gap up opening, something like that. If that is the case, yeah, I personally feel my Bank Nifty reverse and Condor would be profitable. And if I'm realizing some sufficient profits, I would be more than happy to exit it. Okay. Now, maybe with that particular profit that I make, now since we know majority of the times Bank Nifty kind of gives a negative side move, or Bank Nifty has given a directional move towards the closing after 1 p.m. I will think about most probably if I feel okay, maybe some probable correction is going to come in. I will actually buy. See, for example, if Bank Nifty is trading at 30,500 at that particular point of time, Bank Nifty has picked up to, let's say, 31,000. So I probably would kind of consider maybe at 1 p.m. or something. I probably would be kind of considering to buy maybe one or two strikes uh, out of the money, one or two strikes out of the money put option, expecting the price to kind of correct towards the end, because that is what the data shows us, or that is kind of what the charts kind of tell to us. Towards the end, it has kind of shown some sort of correction. So that depends. If we personally feel okay, some sort of inference that yeah, Bank Nifty could kind of actually correct towards the end, maybe you could kind of go ahead and take a put option, maybe one or two strikes out of the money. When you start getting a feeling, maybe a support level is getting broken, something like that. When you get a feeling, okay, it has picked up sufficient, now maybe it could kind of actually fall post 1 p.m. You could do that. So these are the things that I'm personally considering. So once again, let me tell you, this is not any sort of investment advice or any sort of advisory that I'm providing. So this is what I'm personally doing, and this is what I have personally done. So when it kind of comes to Bank Nifty, I have already implemented this. Okay, we call this as a reverse iron condor. So I have already implemented this. So this is what the payoff shows. If some sort of a violent move on either side, I personally feel I could be capable of withstanding. If any IV crush as such is happening, I could be able to withstand it, and will still be able to come out with some decent profits. That is my personal feeling. Then depending on that particular day, and depending on like what kind of looks like the situation of the market, I might consider implementing a short strangle. If there is no big gap up or gap down opening, I might consider implementing a short strangle for the day in Nifty. And towards the end, so let's say Nifty is kind of giving some directional moves, or if Nifty had a gap up or gap down opening, then definitely this would definitely be in profit. That is my personal feeling. Then what I'll do is with some part of the profits that I secured in over here. So post 1 p.m., as we have seen in the charts of Bank Nifty, that it kind of gives some sort of a correction. I'll think about a move like that where I buy naked call or put, depending on the perception at that point of time, expecting Bank Nifty to give some sort of a correction. Okay, so these are the things. So this is my personal plan. So so thank you. So thanks for listening till here. So I don't know how much you probably would have able to understood, but because this is my personal thing, and this is not any advice or something. Once again, let me just make it clear: this is not my personal advice to you to implement this or stuff like that. This is what I'm personally doing. Okay, you're not taking long straddle or strangle today, Mohit. That is what I said. So what is this? So this is nothing else but a long strangle. Okay. So I have bought a 31,000 call. I have bought a 30,000 put. Okay. I have actually bought this, and this and this I have bought. So what is this? This is nothing else but a long strangle. Then what have I done? Okay. Then what I have done is I have actually solved a 33,000 call, I have also sold a 22,000, 28,000 put. Now let's say that the market is really trending, something like that. I'll still make money. If market is having some gap up or gap down opening, I'll be capable of making money. That is what I feel. If that particular day the market opens flat and in the day the market gives some directional move, I personally think, yeah, my setup would be more than enough to kind of compensate for the IV crush and stuff. I hopefully feel I'll be able to make money. So this is my personal thing. I'm no one to predict the market. I'm just making use of probabilities. If I win, so let's say that market is giving some directional move. Market is giving some directional move, and market kind of is capable of picking up further. If I feel maybe I'll kind of actually hold it for the week by shifting the sold call or something like that, right? Because already my maximum profit has been realized by shifting up the sold put and shifting up maybe the shifting up the sold put to collect more premium. I probably would do that. Depends. Okay, isn't the probability 47% quite low? See, this probability of profit is kind of based upon the option Greeks. Okay, so these are system generated values, and we know that this is budget day. Yeah, the probability 50%, but your risk reward is good, right? Your risk reward is good. And one more thing, this probability of profit has been calculated keeping in mind at the time of expiry what is going to be the settlement at the time of expiry. So even though you see this break even points like this over here, so these break even points are actually at the time of expiry. Okay, so at the time of expiry, you need Bank Nifty to move up above this level, or you need Bank Nifty to fall below this level. That is kind of 1,000 points up, 1,200 points up, and fall below 1,200 points down. Okay, but let me tell you, if you look at the payoff graph, so this blue line is what is going to happen to you if Bank Nifty gives a move today itself. Okay, so when the IV is getting crushed, so this blue line will actually come down a bit like this, maybe like this also, depending on how much intense the crush is. But I don't think, I think I'll be able to withstand that. Let's see. Okay, so these are my entry price on this set. First set entry price is this. This is the current price. So at the moment, we are in a profit of 500 rupees per set. So that is the thing. Use Obstra, do your own analysis. You know, some of you, if you feel comfortable with Strangle, you can go ahead. If you feel comfortable with short Strangle, if you can feel comfortable with short Straddle, it's completely up to you. It's person to person will vary. So my personal thing, I'm finding this to look decent. Okay, kind of finding this to be decent. So let's hope for the best. My personal thing. Okay, your trade should be done based on your own analysis and not based on anyone else's. So so my logic has been explained clearly to you, I guess. I'll share the document also. You can just have a look at the charts. Okay. So thank you. So that's all about it. Okay. Something else I just wanted to mention is, so this is not my only running position. So I also have a different position that is running. Just show you that also. So the other position that I have is this particular strangle that I had implemented for the monthly expiry is still running. So I'm possibly thinking that, yeah, if post the budget announcements kind of coming in, if the IV values and all drop, then this will be pretty much favorable for me. So if you see the payoff like this right now, so the payoff would actually kind of come inside as the budget day is over. So that is what I'm expecting. Let's see. So thank you. So I'm just ending this meeting right now. So you can use Obstra, you can use Sensible, whichever platform you want. You can use a strategy builder. So someone who is completely new to the markets, I highly recommend you just try implementing it in virtual mode and don't risk your real capital. Okay. The good thing about the reverse iron condor is the maximum loss is defined. So I won't be having to take a loss more than the maximum loss defined. Thank you.